Hello, everybody, and thanks for joining me. It is Sunday, October 23rd, Sunday morning, and you're looking at charts from a Friday. I stopped the recording just at the Friday open, which turned out to be a huge squeeze day. But the charts you're looking at are from Friday, October the 21st. I haven't updated any levels on these charts, but what I wanted to do was talk about, I mentioned in the prior video, I was going to talk about the trades that I took last week and also just show you what I use as far as charts to track price action. Of course, I have my main monitor, and what I have up here on an additional monitor is the ES, the SPY, and the Qs. So upper left is the ES, that's on the 65-minute, and then lower left is the 15-minute. I like the slower time frames. What I'm discovering is, as a trader, I am easily distracted if I have too much information on the screen. So I've been slowing things down, and that has been helping. Upper right is the SPY, and that's on the daily, and then lower right are the Qs. So for the SPY and the Qs, I track levels like monthly lows, long-term monthly lows, weekly highs and lows, daily gaps, things of that nature. So I try not to clutter up my ES charts, and I use the SPY and the Qs to track major levels. With the ES, I'm most interested in fair value gaps that occur on the longer time frames. And on the 15-minute, that's more of an intraday chart for me for the ES. And if you notice on the 15-minute, I've included some moving averages. I call those my training wheels. I know that ICT mentions adding lipstick to the charts in order for them to make a little more sense. So my moving averages are my lipstick on the 15-minute chart, and that just helps me keep my bearing as far as how price is trending and when likely swings might take place when we have a displacement or a change in market structure. So zooming into the 65-minute chart, what I'll do here is I'll go over the two trades that I took last week. One was taken on Tuesday. Both were longs, by the way, and the second one was taken on Thursday. Start with the bad news first. The Tuesday trade was a losing trade, and then the trade I took Thursday morning was a winner. So I was watching after regular trading hours on Monday, and it's that in-between time after the regular trading hours close and the start of the new session. And I noticed that we gapped up, and it was a little bit of a melt up. It was 15 to 20 points going into the new session. And then when the fair value gap formed, and then a pullback into that gap, that was my idea for a long entry. Keeping in mind that I was bullish, I had a bullish bias. The only thing that I had high conviction in a bullish direction. The only thing that I didn't have is we were trading in a premium. So this half back level, this 50% level, you can look at the previous video to get a better understanding of why that level is there. But it's basically the range that we've been trading in over the last 10 days. So we were in a premium, and I was looking at a long trade, but I did have bullish conviction because I was looking for something similar going into tech earnings next week. If you remember, the June low, the low that formed in June, was the result of a CPI print, and then we had that huge rally. It went on for almost 10 weeks, if I'm not mistaken. It was about a 20% move in the markets to the upside that ultimately formed the high in August. And I was looking for something similar to that I know the market doesn't always repeat itself, but that was my idea. So a fair value gap forms and there's a pullback into the gap. I have a bullish bias. I took a trade there and I checked at the end of the day, Tuesday, I was up on the trade. And that's when I made the decision to go ahead and hold, thinking that we would take out the highs from the top of this range that we've been trading in for the last 10 days. I did not have a stop on this trade. I held it without a stop all day Tuesday, and I controlled risk by just taking a smaller position size. I do have risk parameters set with the brokerage, so if there had been a really big sell-off, I would have been protected there. But as far as exiting the trade, if it went against me, I said if we take out the lows from Tuesday, the following day, which was Wednesday, I would go ahead and exit the trade by the end of the regular trading hours on Wednesday. So the reason I didn't have a stop is the market has been volatile and I didn't want price to wick down into a stop loss. So my stop was essentially a swing low forming below the Tuesday's low. So I thought my bullish bias would be intact as long as we didn't take out Tuesday's lows. And unfortunately, that's what happened. We traded down into a low on Wednesday, a swing low, and there was a nice bounce there. You can see here where the price bounced up into the close, and that helped alleviate the pain somewhat. But I did end up closing the trade right about the 15 minutes or so before the close. So I'll zoom in a little tighter here for Thursday's trade. The fair value gap isn't as easy to see, but I was watching during the London session. I was up early, and just prior to the open, I think it was around 8:45, we had a fair value gap form. Again, holding on to the bullish bias and the bounce off the top of the fair value gap that occurred on the Wednesday low gave me the idea of giving another long a try. So I went ahead and took it, and it worked out well. And knowing after Tuesday's trade that if I get a trade working in my favor, just due to the nature of the market, that I should go ahead and take profits. In order for the trade to work, I really felt like we needed to go out and take not just the most recent high, but go ahead and probe above that. And an hour or so into the regular trading session, it did just that. And as soon as my price target was reached, I took profit. So there you have it. And what I'll do next is go ahead and update my levels, update my weekly high and low. Definitely take a look at any gaps that formed in the price action from Friday and use that to do some analysis for next week. So thank you very much once again for your time and attention, and I will see you on the next video.